The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, squeezably soft koala bear of Wall Street. Just big and fuzzy, eating my eucalyptus leaves and being the chart marsupial. Anyway, we've got an interesting day happening out here. We are up, 12.5 points on the S&P cash, closing in on 1.7 billion shares. We don't have a lot of volume today, but it is getting into August, last couple of weeks. Traditionally, it is a light volume time. What we shouldn't have done today is, and what we shouldn't by the close, is a close above 1938 on the S&P cash. Earlier today, I closed my short positions and I went long. And I have a feeling that we're going to be long in the small caps, probably through the election and maybe even into the end of the year. My guess is that most of the gains are probably going to be in the large caps, although they'll probably drift slowly higher into the end of the year. But we had every opportunity over the last week and a half to blow this market apart. We got down. We did have some decent volume. We should have gone down and tested that over the last couple of days. And unless something really specifically stands out, it looks to me like we've had our opportunity at the bottom and didn't break it out. And we're going to go try breaking it out at the top. My thoughts are going to be that there's not going to be much discussion about rate hikes or anything else before the election. The politicians will be more than happy to try to drill those people interested in that out of the limelight and chastise them for even bringing up the thought that maybe there would be less stimulus. We are probably going to see fairly extensive stimulus out of Europe. Saw a little bit of that. Even more negative rates in Europe, and the DAX was up on that. One of the reasons that we're up. So the worldwide game of hot potato on who's stinking up the place just lasts a couple of days until someone throws yet another massive amount of cash at the problem. And I think that it will probably be through the end of this year now. Some of the other things I suspect that we're going to be seeing are the ramp up to the Alibaba IPO. Part of that is going to be getting the juices flowing in the market. Jesse Livermore said the first thing to do in getting everybody all hot and bothered about a bull market is to advertise it. So we're probably going to see some advertisement of that. My belief right now is that as weak as Apple was, they've been able to hold it up. We're going to start seeing that by the 9th of September, that they're going to be talking about all manner of different products. It's going to be very tough to cut through the hype. And I suspect Apple may have a nice little run on it. Of course, Apple was one of the stocks that I thought should and could have broken down here. And my guess is now, until they start shipping product and maybe it comes up short, the chances of a NASDAQ big decline are probably muted. I don't think that there's that much other than Apple could go up a bit, but I do think that we're going to see a market that's going to at least try to go test out the 2,000 highs on the S&P cash before we go lower. I thought that there was every reason to go lower. We went down and tested it, and it should have broken it out. But every time we get down there, there's more than enough people willing to buy. My guess is that the returns are going to be quite muted compared to the past. And what we're going to see is people starting to bottom fish in some of these categories. Some of those categories like retail, even after Macy's poor earnings report this morning, make me think that we're going to probably see some kind of bottom in retail here in the next few weeks. Probably going to see a bottom in at least many of the stocks in the small cap sector. That's usually the last one in a giant bubble to really get going. I started buying small caps today, and I got a couple of them in the Tech Insider. Going to probably have a couple more in the daily newsletter here soon. But a couple of stocks I wanted to buy long term, and they've come back in with light volume and pretty much everything I need to see out there. In the short term, it's going to be hard to make quite a lot of money, but I think some of these things are starting to line up. So at about face, when the facts change, my opinion changes, and by being able to close, I'm assuming closing over 1938 on the S&P cash today, I think we've put in the bottom for the summer, and we're probably going to look at some light volume short squeezes between now and September. And then September, we're probably going to see some bigger pulls and pushes on the market by things like Alibaba and the hype machine of the fruity cargo cult, as known as Apple. So it is one of those days where you have to say, was I wrong? Man, everything told me we were right. The volumes were light. What we did have, though, last couple of days was pushes down with lighter volume. Could have gone either way. In this case, it popped up higher. Volume's not all that great, but my guess is that right now price is more indicative than a little bit light in volume. And, of course, we still have the end of the day. But I'm looking for some short squeezes in a lot of these stocks that are extremely highly short. We're going to look at a couple of them again. Some of those should have failed or failed spectacularly. Maybe I'm wrong. And we'll investigate that, too. In the meantime, you can call me at 877-927-6648. But I'm saying it's time to go bottom fishing out here on these small caps that have tested lows on very light volume, and have just about nowhere to go but up. Fairly low risk trade. When the market looks like it's going to blow apart at the tops, I want to be buying options with as much downside if the world falls apart at the bottoms of particular sectors like small caps, technology. I want to be buying equities that are in the $2, $3 range and have the opportunity to double or triple in the near time future and give you the kind of returns that you need. Since it doesn't look like the market's going to cooperate on the downside, I'm going to the upside on it. And yeah, Chinese stocks are probably going to be hot. That's probably going to be some of the chum in the water. Look for Baidu and QIHU and some of these others to be great trading vehicles for daily trades. But I think we've had everything we've got here to the downside, and it's now time to flip around to the long side if you can find something that has the right risk reward. Unfortunately, most of these bigger stocks, there's just not much meat left on the bone to the upside. Even if a lot of these stocks do go up a buck or two, we are going to probably see a great deal more movement in the mid caps, and more likely the small caps will really start to run. Most of the likely suspects in those, the stocks that are in that small cap sector that have run repeatedly, look to me rather muted at the moment, and those are, of course, the fuel cell stocks. Those kind of things have already run. So now we're looking at some of the other ones that look like maybe they've consolidated out at those lows, and it is time to go forward. In the meantime, in 1982, it's a Friday, the 13th on this day in 1982. And one of the greatest bull markets of all times begins, but no one believes it's happening. The Federal Reserve cuts its discount rate by a half point to 10.5%. Doesn't that sound astronomical? 10.5%. And the Dow Jones Industrial Average jumps 11.13 points. That's a tick today, isn't it? A tick up and down in a medium moving market. from the previous day's level of 776.92, closing at 788.05. Ronald Koenig of Ladenburg and Thalman and Company tells the New York Times that the Dow Jones Industrial Average could drop as low as 730 to 740 below, for that level before any meaningful recovery takes place. And, of course, it went up, and nothing but up since then. And, of course, the technology revolution drove a great deal of that. But on this day in 1982, the market started to turn. The worm had turned. Of course, markets don't culminate in one grand glaze of glory. And I had thought that we were in the second part where it was still being violently opposed. That is a bottom in the market. And we never got to the third part where it was accepted as being self-evident. But I think that time is coming. But we probably have till November now, early November, or even after the first of the year, before we probably start seeing the effects, or a great deal of the effects of higher interest rates that we should have, I think, right after the election. I bet that that's what they're looking for. In the meantime, after the bell tonight, we've got Cisco, we've got NetApp, we've got PDL Pharma, Gevo, X1, if you're into all those wonderful 3D companies, Aspen Technologies, Noodles and Company, boy, it got beat up last time, NetEase, American Residential Properties, Wu Pharma Tech, and Connects Pharmaceuticals, CNAT. Almost looks bad, doesn't it? CNAT. Anyway, that's pretty much what we got. We're going to go right into charts today and start looking at some of the stuff that was moving out here. Of course, a lot of people talking about King, and of course, down on monstrous volume. This thing hasn't been out that long. It was one of those one-hit wonder kind of video game companies. And like a lot of those, they got pushed out the door. And we're probably going to have to see very, very low prices in this thing, maybe like Zynga before this thing bottoms out. But you've got all the volume in the world. You've busted out the lows. And it doesn't look like anything new is coming soon, and any help over the horizon. King Digital in their earnings call basically said, just move all your numbers down. Whatever they are, just move them all down. A little lower, even lower. Keep going down. Lower, lower, lower. And the market did not reward King Digital. KWK, Quicksilver, also out with news, but it doesn't seem to have done anything spectacular. The thing's still way down and auguring down. Trying to look at a longer term on this one. And it's busted below the lows. Pretty decent volume today. You need more than 5 million shares, and you've got it. So I don't know how far this one goes down. When we come back, we're going to talk about a aquarium stock that doesn't look too good today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Wouldn't it be great if you could get a red light, green light indicator that gives you signals on 25 different future contracts? Now you can with Taz Signal Box. This red light, green light market profile system dynamically updates 24 hours a day and provides you with important trend and trade signals on 9 different commodities, 9 different indices, and 8 different currencies. Right now, you can receive a free 2-week trial to Taz Signal Box. For all the details and to find out how the Signal Box works, visit the front page of TFNN.com.
Andy Heck's powerful weekly newsletter, the Technomental Commodity Report, has delivered multiple triple-digit winning trades in recent months. And right now's the perfect time to get a full month-long trial to Andy's newsletter with no obligation to pay anything. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you'll lock in the low rate of only $59 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we're back. You got a little bit going on here. I'm just checking out some things. And a couple ticks back down lower. But looks like 1945 on the S&P cash. So what do we have? 1.78 billion shares. So volume a little bit light. I don't see any real selling coming in. And I don't see a lot of buying come in either. So it looks like we could probably close out probably right around here by the end of the day. But I have a feeling that will probably shut the door on at least the next few weeks of downside in this market. And we will keep you apprised. Oh, anyway, we were talking about a big aquarium company doing rather poorly. That is SeaWorld Entertainment. I guess the Blackfish movie has done them in. And SEAS is hurting today, down, hit a low of $18.17. If we take this back a little bit and see just how far this can go. What are they trying to figure out what's going on here? Maybe maybe it came out. Maybe it's been out that long, huh? Oh, there it is. Thought it a little bit longer. So way below the support level, around that $27, $28 level. It's acted as support. I guess you could say that it broke through the ice. Anyway, Rigel Pharmaceuticals, kind of interesting one. It's down on moderate volume. Needed either 1.5 million shares or 2.1 million shares, depending on how conservative you are with the previous lows. But to me, enough volume out here and a gap down probably does open up the lows of $2.31. When we look at the winners out here, it is AMTX, Ametis Incorporated. Nice little bounce out here. Not that great a volume, but one of the bigger movings out here. Let's take a look at the headlines on that just to make sure. Business update conference call. Reports second quarter results on August 7th, so that was last week. That just must be it. Announces a business update conference call to tell them about new things. CSIQ in the solar space, and this one's got a pretty decent amount of juice out of here on this one. And you're going to be going up against this $32.14 high from July 7th. We haven't gotten there quite yet. 20% on earnings. Let's take a look here. Beat EPS, beat just about everything. Canadian Solar traded as high as $29.95, and the stock was the fourth best performing stock on the NASDAQ. Let's see. Profit of 55.8 million shares, 95 cents, compared to with a year earlier loss of 12.6 million or 29 cents a share. Adjusted earnings were 64 cents a share. Revenue jumped to 623 million from 380 million. So revenue's going up and looking pretty good out here. And nice little pop. Live Nation and or Live Deal, excuse me. This one's been coming down for quite a while. And let's look at the headlines on it for a little while. This thing did pop back into the trading zone on the 23rd. And let's take a quick look here at the news and see. Company reported earnings of 2.6 million. Just at 2.67 million. How did this is a company like this even in business? Public. 2 million. Well, anyway. Live Deal restaurant platform ends with the 10.3 million in cash, up for 9.6 million in cash the previous quarter. But it just seems to me like these things shouldn't be public companies. 10 million share company. A $10 million company. Those are private companies. Hard to see, but of course, a lot of hype out here in the marketplace. And we're going to be talking about some of these other stocks, but I actually had some fairly interesting stocks. Let's see if we can go through them real quick. Oh, well, we will when we come back. You can always give me a call at 877-927-6648. You can always email me at path@tfnn.com. And you can always call at 877-927-6648.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra extra edge when it comes to trading and investments? Then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 8 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
As we come back, we're going to look at a few stocks. Again, you can give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the Tiger's Den. And we'll try to take out. I think a lot of people are taking a siesta today, as the market's been rather flat for the last hour and a half. But we will take a look at it. Sanchez Energy. Oh, I was going through some of these other ones. We were talking about Baltic trading the other day and how it had a sharp trade down. Wanted to see some volume really coming into this one. It has not come in yet, but it is moving up. Another one that has made a little signal out here is Crown Castle, CCI. This one has gone up against the May 8th high, $77.95, 3.2 million shares on that date. And we see the August 11th challenging that high, closing back below it on 2.1 million shares. So basically 30 and 35% light, something like that. Energy was good on the way up. And we really didn't have strong energy down. So this thing looks like it's in a bigger trading pattern between 78 and 72 bucks. Commercial metals. Now this one's kind of interesting to me today. Certainly had a light volume test of the previous low on June 27th, where it came in with 1.6 million shares at $16.69. Came below it with 3 cents lower yesterday, and just 800,000 shares. So certainly tested its low on about 50% of the volume. You want to be keeping an eye on that one. There's a few others out here. Home Depot, kind of interesting to me. You had two highs in that mid-82 range. You had the first one on January 2nd and the second one on March 5th. 9.7 million shares the second time, 12 million shares on the first hit. And very light volume up in here today. I'm going to consider and say that of these stocks, probably the weaker ones are going to be housing related as we go through in the next 6 months. But doesn't mean that they have to roll over almost instantly. Another one that's kind of interesting to me out here is Lexmark. This thing had been real weak and come back several times. I had shorted it, and I don't know, I think ended up flat or something. Didn't really matter that much. But what we have up here is, a nice thrust on July 22nd with 1.9 million shares, and then not much as we're going through that today on 340,000 shares. So a lot of these stocks still out here testing lows. Allscripts, interesting low out here today. It came within 2 cents, so you'd probably want to see that challenge maybe tomorrow. But the June 16th low out here was $14.40, 2.5 million shares. When we look at that one, 2 cents light today, but boy, is the volume light, 1 million shares. So you got to kind of have to look at it. What I dislike about this one is the energy picked up slightly on the way down compared to the way up from that June 16th low to the July 23rd high, and somewhat problematic. Proof point, PFPT up at its highs, now challenging the July 2nd high, $40.03 with a million shares, let's call that, up about 30 cents short today. It has not pierced it, but it is close, so you want to be watching this one tomorrow. 620,000 shares so far today. And let's see, what else do we have? I'm going to go through all these. Spirit, Arrow, Silver, Standard Resources. What else do we have? Symantec Corporation. This one's coming up to a resistance level that's been pretty good in that high 23s and low 24s level. First time on November 18th with 8.1 million shares. Second time with 15 million shares. And you had a spike into it on August 7th with 9.2 million shares, but it's gone sideways since then. There was kind of a significant gap down on the 24th of October last year, and it had trouble with that gap, like we said several times out here. Still has a high volume low out here that you want to watch. That's the March 21st low with 60 million shares, and you have to worry about that. Let's see, what else do we have out here? TEDU. Let's take another quick look at this one here. Trina International. They had a nice little pop on June 22nd with 1.1 million shares. 775,000 shares yesterday, but very light as we go through that high today at 374,000 shares. Energy did pick up fairly well from that July 24th low, though, and interesting. So what else do we have? The fresh market. Now, we've been talking about this one for a while. This thing is all these very expensive food places have been having some problems holding up in this economy. And, of course, Whole Foods, some of these others have been smacked around a little bit. But getting awful close to giving us a decent test out here at the lows. TFM, the fresh market, May 22nd, $28.60, 1.4 million shares. Came into it with 1.2 million shares, but that was over, 71 cents higher on August 1st. It's kind of been toying around. Looks like it's going to get awful close to this low out here. Of course, the day after it had that low, big volume, started it back up with 4.6 million shares. So you're basically in that candle, and you're going to watch for something right around that 2860 level. And right now it looks pretty good that you're not going to have anywhere close to that kind of volume. So maybe we are at the point where we could start looking at some lows. And see. Anybody in the den have anything to say? Don't see anything. Just a quiet day. The natives are restless. TiVo. TiVo certainly looks like it's come back in and ready to make a high. You had a big spike on October 24th with 10 million shares to $14.25. Tried to get into it with 6.2 million shares on March 4th, but was about 45 cents light. Got in and tried again on July 30th with just shy of 1 million shares. And, of course, volume continues to be light out here. This one looks in a trading range between the 11:31 of April 15th and these approximately $14 highs. Let's see, T-Mobile, Tata Motors. Well, we're going to have to look at Tesla right after this. Kind of interesting that we did have some nice, huge energy in this thing on the 11th, where they came up with almost 3 million shares. It's toying around with these highs, hasn't pierced it yet. The July 22nd high out here, 42.83, would be the setup. August 13 sets up the other side of that. Hang on just a second while I look at some things out here. Okay, and basically what you have is that challenge, but we need just a little bit more, about 50 cents more, and a test of that $42.83 high would be very telling. Now, Tesla did test its highs yesterday and went 64 cents over the high on 8 million shares, 6 million shares, and 5 million shares today. So you're going up against a 24 million share high. The energy did slack out a bit on this one. I suspect that it's not quite ready to short out here. I'd like this thing to go to 285. And think that maybe if all the volume falls out by then, maybe enough shorts will be out of this that you could conceivably short it, but I don't think that there's a play in that one right now. And just flip through a few out here that are on my radar. VRG, or VGR, excuse me, which is a vector group. This one's been banging away. I'd be watching this on any kind of real push in the marketplace, but you got to kind of watch these. It had a high on March 4th, $21.74. 3.3 million shares came into it with April 1st, with about half that volume, 1.7 million shares. Very light volume, 1 million shares on April 29th. In the last couple of days, as we've getting back up to that yesterday, 833,000 and 487,000 shares. Again, a lot of these stocks probably won't break out, but if we continue to see lighter volume over the next couple of days, my guess is that we could have a very low volume short squeeze into the September timeframe. Let's see what else we have out here. Evis. Webster Financial. And I don't think it has anything to do with Webster's from television or the dictionary either. WBS. This one's been banging away right at the low end of the $28 range and as low as the $27.77 we saw on August 1st. But volume has not really picked up. You're shy by probably 30% of the volume out here. But a lot of these stocks, just a tiny bit more energy on the way down than the last move up. And looks to me like a broader consolidation in some of these stocks. Now, Weatherford International has had its retracement a bit. And this thing did come down with some fairly decent energy. It looks to me like it's setting up an ABC down to this $20 range. At that point, you're going to find very good support levels that had 37 million shares on the 25th of April. And I think that's all you got to say. This thing's going to have a lot of volume to come back and bust that gap. You want to be watching Weatherford at those levels. Western Refining, we've got a nice high out here from $45 on May 6th. 2.3 million shares going through that today with 900,000 so far. So another one that's going to have 50%. Energy wasn't all that bad, though, from the lows out here, so I wouldn't be pulling the trigger short on this one. But certainly very interesting looking stock, and maybe just the lower oil prices are good enough to get it to hang out at this higher price. But Western Refining, one of those that's bucking the trend for a little higher, but not the energy you would like to see in this one. And see, what else do we have? White Wave Foods, another food company. This time, this one broke the high with high volume, so you know it's going to get tested again. White Wave Foods, June 18th, that had 1.8 million shares at $33.16. When we look at this going through and trying to pierce it on August 7th, $33.44, 6.2 million shares. And kind of light volume going sideways here for the next couple of days. You probably don't want this thing to go sideways much longer, or this thing's probably going to bust out. So I wouldn't be short this, and probably the best you could look for is a pullback to $31, maybe $30.75. But this one looks fairly interesting out here with most of the other ones not looking so good. A little better energy off these mining stocks. I've been watching these miners here for the last few days. April 4th, this thing had 2.8 million shares at $43.42. Came into it with basically 300,000 shares less on August 11th. So this one, a little bit better than I thought out here. The energy did tail off just slightly back up into this range, but it makes me think that at least a great deal of the metals and miners are in a bigger consolidation range from $43 to $38 on this XME. Question or statement in the den about HD. Yeah, nice little doji out here on HD with light volume. So you kind of have to be watching that. S&P doesn't look like it's moved much. 1945 and 1.9 billion shares, so volume's light, but just about no movement in this market right now. So we'll have to keep an eye on it. But I don't think I think we're going to go into a quiet period over the next few days. I think the fireworks for the summer are probably over, and we're probably looking at the B team coming in a day or two. We're going to see everybody from Wall Street head off to the Hamptons, and of course, for the most part, the discussions will be about how can we keep this market from going anywhere, either up or down, and take the volatility out until we get back from our vacations. And I think we've got a good week of it here, and when they come back, maybe the last week of September, maybe we'll get some movement in these markets. But I have a feeling, for the most part, it's going to be light and variable, as they say out on the water. It's going to be tough to make any kind of money, but can look at some slight drips up, especially in the small caps, which have really dropped totally out of volume, and some of those shorts may be forced to squeeze. Express One, Expedited Solutions, XPO is the symbol on this one. Talk about hanging out at highs. So I'm going to check and see if there's anything in the headlines about a buyout in this one. Corporate rating, logistics, proposed 500, note, coming out with notes. So they're trying to get this one to go sideways. Interesting. So it certainly looks like $30, $31, $32 range. Looks like fairly decent resistance. When we come back, we're going to talk about Yelp and Cisco after the bell on earnings. Be back in a minute.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market.
Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
We're told to follow our passion and everything else will fall into place. I hope that's what each of you are doing each and every day. Hi, I'm Steve Rhodes, host of the Money Master Show at TFNN.com, and my passion for technical analysis is what led me to the most fundamental discovery in pattern recognition, the Rhodes Momentum Indicator, market scanner, and trading strategy. A set of tools that identify the momentum and power of the trend, the likes of which have never been seen before, for every market and every time frame. Yes, folks, the trend is your friend, unless you're on the other side. New to technical analysis? This is the place to start. And experienced traders take advantage of the trend like never before. Experience the power of the Rhodes Momentum Indicator each day, available to subscribers of my newsletter service, Mastering Probability. I guarantee your satisfaction for the next 30 days unconditionally, so there's no risk to you other than being on the wrong side of the trend. Mastering Probability, available on the homepage of TFNN.com. And folks, live with passion.
Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we are back. And it is kind of interesting. We're looking at Yelp here. And this thing had a nice little gap down, and that is with some fairly significant volume on the 31st of July. 17.5 million shares. We're starting to come back and fill that with Yelp today. And volume is at least better than the last 4 or 5 trading days out here. So we can imagine with an hour left, there'll be a little bit left. Okay. It's got pretty much what we're looking for. And that is a, what can you say? It's a nice little pop back in here into volume. And, yeah, I'm going to watch that. But it looks like to me this is probably got a bunch of options on it and looking at a $75 expiration on Friday, which is probably pushing a little of the market out here. Let's see if we have anything else. Science Bancorp. Let's take a look at Cisco here because it's after the bell. fact, we've got a few of them after the bell. Maybe we'll have time to look at some of these. Cisco Systems, the old Internet of Everything seems to be pretty good. You'd love to see this thing come back if you wanted to be long this thing back into the $23 to $24 range. My guess, though, is that with Chambers leaving at the first of the year, who's the CEO of Cisco, he's going to throw everything into this one and make it look good. And one of the reasons is he's going to probably start the same kind of thing that Steve Ballmer and Bill Gates did, which is a long-term evolution of selling shares after they leave. And he'll probably be a seller for forever for all the stuff that they have. It'll probably take years to get out of it. But not a bad deal to start selling it at long-term highs. The Internet of Everything, of course, everybody getting more and more devices means more and more Cisco routers, and I think that they're going to do okay. Kind of interestingly enough to me, they sell one of the more expensive routers, and there are just not that many upgrades necessary on these, so a lot of people can do with the cheaper routers available from other companies. But a lot of people, it's Boeing or I'm not going, and it better be a GM car. I'm buying a Ford. In the case of routers, no one fires you for buying a Cisco router, and I think that continues to be such a high percentage of their business. It's not going to change, but kind of hard to see where earnings are going on this one. But my guess is if they're good, it's back up to $26.08, and you're down $1 at $24 where that gap comes in. So risk reward probably pretty poor on playing that one. X1, a lot of these companies came out with little or no cash as we look at some of these 3D printing companies. This one's finally looking like it might be trying to form some kind of base out here. You'd certainly want to see this thing come out and test the lows at $24.36, though, from the April 15th low, and that's what we're gunning for. It got into it kind of on May 20th, but it was it had a lighter volume, and it kind of got into the candle, but it didn't pierce that low, and that's what I was waiting for. And even if it takes a while, I think you've got a chance, and I'd like just slightly disappointing earnings to get this thing back into this level. Anyway, we'll see you tomorrow at same bat channel, same bat time. And remember to sell when you can, not when you have to. And we'll see you tomorrow. Channel 14 on Tiger TV.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
You're watching Tiger TV.